This is the only market structure lesson that you'll ever need. Step 1, highs and lows. Being able to identify highs and lows on a price chart like this is key to understanding market structure. Start off by marking out every single high and low. After mastering that, you should easily be able to do that on a real price chart. Step 2, the market structure shift. The market structure shift shows us whether price is bullish or bearish. This basically means whether price is going up or going down. When a high is broken like this, that is typically an indicator that price is bullish, and that is also known as a bullish market structure shift. Now, when a low is broken like this, that is usually an indication that price is bearish, and that is a bearish market structure shift. Now, pay close attention to this next step because you do not want to miss this. Step 3, fair value gaps. Fair value gaps are the last piece of the puzzle. Once you identify your highs and lows and your breaker structure, you then identify a fair value gap. This is where you anticipate price to move away from. I mean, just look how many times price breaks structure and uses fair value gaps to move away from. To sum it up, identifying highs and lows helps you identify market structure. Market structure helps you identify if price is bullish or bearish. And fair value gaps help push price higher or lower.